Welcome to your last Mortgage Insider update for 2024. It's December the 30th. Giving you a quick update on kind of a summary at the year end and what we can expect in the new year. It has not gone as expected, but we can say that for sure when it comes to rates. This time a year ago, we were talking about the Federal Reserve starting to cut interest rates as early as March, and they waited until September to make that cut. So if you've seen any of the updates recently, it worked in the exact opposite. When the Feds cut the rates, we actually saw mortgage rates move up after a lot of changes and the most recent changes in their projections going forward into 2025. So let's take a look what that leaves us with to start the year. As of today, we have the 10-year Treasury pulling back 7 basis points at 4.55%. And we take a look at the last year, and wow, this time last year, the 10-year Treasury was down at 3.93%. And it has been a roller coaster for sure. I said earlier, the Federal Reserve was scheduled to start cutting interest rates as early as March of this year. And we can see that that expectation was not founded. And the run-up on the extended time period we ran into with the Federal Reserve's changed in policy. They continued to kick the can down the road, waiting for better and better data, which inflation very slowly came down, but didn't come down nearly to the level that they had hoped for. As the year progressed into July, the expectation was that they were going to cut the rates. They were going to see that reduced inflation. So prior to any Federal Reserve cuts up until September, when the Fed actually made their first 50 basis point cut, the markets had basically come down with the 10-year Treasury as our barometer till right at the time they actually came out with their statement in September, cutting 50 basis points. And from that moment, we saw the rates run up to where they peaked in November. And then most recently had run up again after this last Fed meeting where they announced their last 25 basis point cut, but they've adjusted their future projections into 2025 that instead of being 4 rate cuts in 2025, likely only to see 2 rate cuts. Now, this is all projections. None of it's guaranteed, but the market does trade on projections and the futures of what's expected. So as we come to the close of 2024, we can see the 10-year Treasury is actually just a smidge below its high point for the year set back in April. Now, we have seen these things, go in spurts where it's up and then it's down and then it's up and then, I'm not going to say it's going to start going down right away, but likely we'll start to see at least some kind of a buoyancy with interest rates leveling off. So the expectation of change is not going to be quite as high going into the year, since the Federal Reserve has basically stated they're only expected to cut the rate twice. That means we shouldn't expect that to happen anytime soon. It will be dependent on data and inflation. So that's what we're going to be looking for in 2025 is what's the inflation rates. We'll start to get those in the middle of the month with the consumer price index and later in the month with the personal consumption expenditure. The last couple of data points came back not as bad as could have been expected. The PCE report came out just the week before Christmas and actually was not as bad or not as much in increase in inflation. So it did actually increase slightly, but it has leveled off. The one thing it's not doing is it's not going down to the Fed's target of 2%, which is why they're thinking of holding their funds rate higher for longer with less rate cuts into the future. So with that, we'll have to see with the new administration coming into the White House and the new Congress, if there's going to be any changes in policy that could start to change the outlook on interest rates and inflation. For instance, tariffs could be very inflationary. It could drive up cost and it could basically upend all the progress we've made in inflation in the last year to 2 years. So we will see, bringing weekly updates on our YouTube page. So if you want to follow this weekly, subscribe. Make yourself happy New Year's and cheers to 2025.